Strats, are you done with hurricane season yet?
Whether or not hurricane season's done with me. Hopefully they're done. It would be really late at this point. Well,
All right, Steve. This is a great day. I feel like we have the perfect guest for the perfect time. We try not to be topical in the markets, right? We try not to, we want these to be evergreen. But I feel like with the way the market has been post-election, we've had a big bullish run in all kinds of assets, right? I feel like this is a good time to have Denise on. And amongst many things to talk about, two things I want to talk to her about are FOMO and what was the other one? FOMO, and then the opposite of FOMO, like you're doing so well, you're making so much money, and sometimes that's hard for people to deal with, right? So you're either on the right side of the trade and you're doing well and you don't know what to do next, or you've totally missed it and you're freaking out, right?
Yeah, and everybody's freaking out in one direction or another right now because we're just had the election behind us. We're taping this on November 13th. Some people have made a lot of money. Some people, like you said, Sean, have FOMO. Maybe they missed it. And Denise is the perfect person to kind of talk about, what makes traders so crazy.
So Denise, we'll have Denise give us a little synopsis of her background, but she's been around a long time. She's seen a lot. She's worked with all kinds of traders, big time hedge fund traders, prop desk traders. I don't think she's worked with any retail. She could explain that. I'm not sure, but she has been around the block and has seen a lot of things and has helped a lot of traders become better traders. So let's not waste any time. Let's bring Denise up. Denise, welcome to the show. Thanks for joining us on Off the Charts. I hope you're doing well.
Thanks for having me. Yep. Okay.
So we were talking before we went live. You are based currently in Utah, correct?
Park City, Utah.
Steve, you ever been to Utah?
I have never been. No.
I have not either. I think I could drive there from where I'm at. It'd be an aggressive drive, but I think I could do it.
500-ish miles, I think. Yes.
Okay,
because I haven't driven back to Colorado since I've been here.
Yeah, I would love to get out there. I'm a big. I'm not a skier, but I love hiking in the mountains, and that's kind of my jam.
I'm surprised to hear that you've never been to Utah.
Never been, no. Yeah. But Denise, you're not from Utah.
No, definitely not from Utah.
Yeah, why don't you tell us where you mentioned you're from Akron, Ohio. That's where you were born and raised, yeah?
Born and raised in Akron, Ohio. Yeah.
You are the only other person I know from, or there's two people I know from Akron. They form a band called the Black Keys. Just throwing that out there. It's the only other people I know from Akron, Ohio.
What was that band in the 80s? It'll come to me.
I don't know. What kind of music?
My dad used to play golf with their dad. Come on, somebody. They're a pretty famous band. Pretty famous band from Akron. Yeah. Oh, well. Yeah. The story's no good if I can't remember the band. One day my dad says, hey, Devo.
Oh, Devo. Says,
oh, wow. Oh, he's like, oh, Bob is coming over, like, after golf. And I'm like, who's Bob? He's like, his kids have a rock band. I don't know, Devo or something. I'm like, what? Anyway.
Don't they sing that song Whip It? Right?
Oh, yeah.
We did a post about that years ago with the whip saws. Yeah, Devo.
Yeah.
Anyway. I was a child of the 80s and I enjoyed Devo, but for some reason in my brain, I always thought they were a European band. Huh.
Akron, Ohio.
Wow. Okay. I never put that together. That's amazing. All right. You obviously did not get, or I shouldn't say obviously, but I don't think you got into the trading business when you were in Akron, did you? That took a move somewhere else, right?
Did you spend time in New York City?
I did spend time. My dad was a buy and hold investor, as was my grandmother. Like they learned to buy stocks after World War II, and they would not have known how to sell a share of stock. I'm not kidding. My dad put them in dividend reinvestment. If he'd had to sell, he wouldn't have known what to do. But
probably served him well.
Yeah, it did, and my grandmother. But But I went to Chicago to go to the University of Chicago for graduate school. And the truth is, I've told this story before, but I started dating a floor trader at the SIBO. And after he got to know me for a while, he kept saying, you should be a trader. You should be a trader. And I'm like, I am not going down there with you guys. And like, you're all taller than, like, not happening. He did get me to start trading when they went upstairs. So that's how I got into it. And then he was actually instrumental in getting me a job in New York, which I never planned on doing, running a day trading desk in the 90s. And so that got me to New York. I thought I'd go for 2 or 3 years. I was there for 24 years.
Wow.
So when you say running a day trading desk, were you were an active trader yourself? No?
Yeah, I traded, what we now call long short equity. I sat next to a very famous trader named Dmitry Balyazny, who runs a hedge fund called Balyazny. This has been pushing 30 years ago at Schoenfeld. Absolutely trading industry group momentum intraday, buy all the oil stocks if they're going up, sell all the drug stocks if they're going down.
And how long did you do that for?
I never know for sure. The whole, I don't know, 5 or 8 years. I mean, if you think from the time I started, well, I don't know, so probably more like 12 or 15 till the time I literally didn't day trade anymore, which was 2009.
Well, I'll bet there's a weird time warp going on about that time in your career where there's parts of it that felt like it went by in a flash, and there's probably other parts of it that felt like they went on forever. You probably had both of those days. Maybe you had both of those days in the same week.
Yeah, of course. I ultimately, I started in this long short prop trading upstairs from the SIBO. By the time I ended, I was a member of the Chicago Mercantile Exchange, trading mostly futures. And actually, I'd started this consulting because the guy that got me into trading was crazy. When I started dating him, I was like, you lost $500,000 in 3 hours? Could you make that make sense? So I actually, from the get-go, I had this interest in why do these people do what they do? This is very bizarre. And then I used to go home on Friday nights in Chicago with stock market wizards and, other sort of trading psychology books. I'd be like, no, you guys go out drinking. I'll have wine at home and read this book. So I had this interest I also had a master's degree at that point in neuropsychoanalysis. So I was interested in why people do what they do. And all that just means is, how do we have an unconscious? Psychoanalysis is understanding your unconscious and neuro is understanding the brain. And so it's if we have an unconscious that's influencing us to lose $500,000 in 3 hours, how's it work? So I already had that going on. And then actually in 2003, I was trading at a prop firm and I was taking classes at an Institute of Psychoanalysis, and they wanted to publish my master's thesis. And I was like, it's like a decade old. You will sound stupid. And I said, but you know what? It'll be fun to have something published. So I'll update it for you. And Antonio Damasio had shown we cannot make any decisions without emotion. And I was like, well, damn, that changes everything. And basically, I just started talking about it. And here we are 20 some years later talking about it.
Now, in 2003, when you were at that prop trading firm, or at any point really during that period of time when you were at the prop trading firm, I have to imagine you were probably one of only a handful of women doing what you were doing, at least in that office. Is that fair?
Yeah. Originally in Chicago, originally it was me and 18 guys. But then the daughter of a floor trader joined us. So it was she and I, or her and I, or whatever it is, and 18 guys. But you know what was shocking about that, actually? It was a total meritocracy. I had actually come from a job where they told me they hired me as an experiment, and they did, and it was painful. And I was a little bit disinclined to be in that environment, but I figured, it's me against a screen, and so who cares what they do? But it turned out in that prop firm, in that scenario, it was that way for everyone. No one cared. Either you were already a good trader and a decent person, or look like you were going to be a good trader and a decent person, or a liar or a cheater, whatever. And that's how you were judged. So it turned out to be the most egalitarian place I ever was.
I'm happy to hear that because I worked at a prop trading firm when I first started, and there were 40 of us in there, and we had one woman trader, and she was great. She was a great trader, and she would often tell me and anyone who would ask about how the thing that motivated her more than anything was not so much making money, but to prove to all these asshole guys that she can do everything they can do, but better. And I really liked that. I thought that was a really cool attitude, and that's what drove her, and that gave her her why, so to speak, and it served her well.
The first prop firm I was at, if anyone from a long time ago is listening, was run by a guy named Bob Cantor, who was kind of famous back then. Bob Cantor once called me in his office one day and said, "You have the best instincts I've ever seen, but I don't think a woman can trade." I'm like, "Bob, is that a compliment or not? Because it's like really hard to tell." And I knew he liked me. I mean, he had been like mentory to me and told me, So I was just like, "Did you really just say that?" But that dad and grandmother that bought the stocks, that grandmother divorced her husband in 1932 with two young children and supported herself and her two young kids. So my dad grew up like with this really strong female. And then I literally never knew women got treated different. Like never knew. I was 28 before I ever knew that. So that helped me. I just never expected to be treated differently. So, I mean, I've learned since that the world's not actually that way.
But when did you figure out, like, when did you have that moment? You hung out with crazy traders for long enough, and then finally you were like, there's something here, just talking to them and helping them, and something from a consulting angle. When was that moment where you were like, I'm going to stop trading and focus on the other aspect of this and help traders?
In 2009, in the fall, I was, commanded, invited, whatever, to be on jury duty. And I was on a fairly complicated trial for like a month. And at the end of it, McGraw-Hill offered to publish my book. And so it was sort of like, okay, I've been away for a month. I'm going to write a book. This has turned into a thing. And I never went back to day trading like I had for the previous, whatever number of years it was, 15 or 16.
And you have since published a few books, am I right?
Just one. There's a second one. There's a second one forever in the works, but forever in the works. Yeah.
Okay, maybe I'm mixing up with something else. There was a couple of years ago, you were offering, I think it was like an online training thing.
Oh, that I have. So I built this course called Intro to the Trader Brain. Basically,
okay, that's what it was.
You go on, you pay for it, you download it. It could, like, someone could take it and turn it into a book, if anybody bothered. Yeah. I mean, not anybody else, but I mean, somebody working for us, obviously. But the original book is called Market Mind Games, written in 2010. It's mostly the science of perception and judgment as applied to trading. So it hasn't changed that much. I mean, it has a fictional story in it that's set in 2000, starts in 14. So I would love to update it from that perspective. And by the way, the fictional story is what got me in trouble with billions, but we can come back to that since you guys mentioned it. But the basics that are in there, aside from the spelling mistakes that McGraw-Hill left in the book, which embarrassed me to no end, the basic trading psychology is timeless.
So now, what is the number one thing, I guess, or the number one problem with the trader brain?
Or that people don't understand it. That the widespread conventional wisdom is based on the wrong model of like how the human brain perceives, judges, and decides. So
it sounds like you, and I'm the same way. You probably get highly annoyed when you see people on social media or even on TV who are spouting, pop psychology things, sell your losers or, cut your winners, cut your losers short and let your winners ride. It's so easy. That's how you manage your emotions. When you hear stuff like that, I imagine it makes your skin crawl.
Well, it probably not go quite that far, but it does annoy me. If you ever see me tweet like, No, you don't have to control your emotions. You have to control your actions. It means I just read a tweet by somebody with a big following that says control your emotions.
Now, I've seen you talk about this a lot, and one thing you talk about is emotions are actually, and I'm butchering the way you say it, but the gist of it is emotions are actually signal that we need to use to make better decisions. Am I in the ballpark there?
Yeah. I mean, this is from a brain point of view. This is not me saying it. So what the research shows is if you don't have any emotion, you cannot make the simplest of decisions. You cannot decide what day to make an appointment on. You cannot decide what shirt to wear. You cannot decide what to buy out of the vending machine. Why is that? Because you have no feeling of what's right. Like, should I wear a t-shirt, to my aunt's funeral? No, right? Like, do I want to buy the candy bar or the peanuts? Like, you have no sense of what helps you or gets you what you want. People don't think of that as an emotion, but it's a sense of confidence. This is the right thing for that. Like, it's better for me to have an appointment on Friday afternoon than Wednesday morning after CPI. If you don't have that feeling of what's correct, you can't decide. And that's a fact. I mean, that's a fact.
Yeah. Well, why do you think, I almost feel like when you come up as a trader and you read all the books and you follow like the traditional route of learning and try to be a trader, it's almost like conventional wisdom or conventional knowledge that traders should be emotionless, right? And emotions are bad. Like, how did we get there? Why do we believe that it's like the Wolf of Wall Street kind of bravado trader?
Yeah. So I think there's kind of two parts to it. One is, it's like the earth looks flat when you're at the beach, right? So you look out across the ocean, it looks flat. So you think it's flat. It's not actually flat, but you think it is. And so then, absent knowing any better, you behave as if the earth is flat, meaning you don't try to sail to the edge because you think you're going to sail off. Well, it looks as if emotion is the problem because people do act out strong emotions in a way that's not helpful. But it's the whole understanding of like, is it that ocean's flat or is there something else going on here? So basically, people aren't taught, well, they're mistaught the way emotion really works. And so then when they have strong emotions, they mishandle them. And effectively, they do sail off the end. They act out the misbelief that makes it look like the ocean is flat or emotion is the problem. But if they know how to handle their senses, feelings, and emotions, which are all pieces of information we get through our bodies, a scientist might call it visceral intelligence. Like, if you understand how those aspects of being a human work, then like how to navigate them better. And that if there's a really, really strong emotion, the thing you need to do is analyze it, not act on it. And if it's really, really strong, it probably is telling you something about you and your ego and your safety way more than it's telling you anything about the market.
But are there certain emotions that should be acted on?
Well, I will call true intuition a form of emotion, a form of visceral intelligence. Now, you have to figure out what true intuition is for you, but yes, it should be acted on. Like,
I was going to say intuition, like how does someone, we all have intuitions, right? Maybe they're right, maybe they're wrong, but like how do we act on them? How do we harness those intuitions and how do we know which ones to act upon and which ones not to act upon? I guess that's
I think the first thing anyone has to do is like, you have to look at your whole decision-making apparatus differently than everyone says, right? You have to decide that senses, feelings, and emotions are a data set, and your task is to learn to understand this data set. And so intuition, for example, is usually very calm. It's like, like if you see someone in an airport you haven't seen in 10 years or in a bar, that you see their face and you know who they are. That sense of recognition, intuition is like that sense of recognition. So you have to be able to say, is that what I'm having now? That kind of calms. Oh my gosh, there's my friend John from college. Maybe you jump up and down because you're happy to see him, but it's just this you feel like you recognize something you weren't expecting. Intuition is like that.
What might it say about a trader if they are frequently acting upon their intuition, or at least they believe they're acting on their intuition, and their intuition leads them down a bad path repeatedly? What does that say about that trader?
Well, either they've really not been trained and within that not found their own style. Like if I have a number one rule of trading, it's that there are an unlimited number of ways to understand and interact with the market. And you got to find the one that makes sense to you. You know, like the time frame, the kind of pattern, it used to be New York Stock Exchange stocks all had different personalities because a literal personality was running the way they moved, right? And so some things would be really volatile. I mean, it's still true. Some things are much more volatile than others, right? Some people are much more comfortable with that, or some people are just comfortable, scalping for a few. You need to find the way that makes sense to you.
Yeah.
You need to be able to describe it to somebody on Saturday afternoon, like not when you're in front of the screen, and it needs to make sense to you on a Saturday afternoon. Now, if you don't have that, you can't have the sense of, if you ever met John, you're not going to recognize him in the bar in the airport, right? So you have to do the work, but there's no one right way. I mean, there are some ways that are better than others, but like I was thinking before I was talking to you guys, at any one time, I have 20 to 25 active clients. The long, short equity people that are doing fundamental analysis, you could argue they're all doing the same thing, but even the way they do it is not, it's like a fingerprint. The stocks they like, the time frame they really trade in. I mean, they'll all say, oh, we're in this for 1 year to 3 years, because that's what their investors want to hear. But it's really, more like way less than that. So an expert and, or even a decently trained person has a sense of the thing they're trained in. Pick anything, music, sports, cooking, it doesn't matter. Like a person that has some expertise in an arena has a sense of what's correct. They say a really good chef can cook a steak by sight, right? So you have to have the background. You can't just... Now, I mean, Bob Cantor told me I had really good instincts, which was the same thing that my friend saw in me, which there is research now that says the best traders use theory of mind. Theory of mind means I have a theory of your mind. When you're playing poker and you're trying to figure out if someone's bluffing or not, you're using theory of mind. So there is research that shows people who are better at theory of mind are better traders. And I think that's because you pick up the meaning of price action maybe more intuitively, maybe more, unconsciously.
You can create a narrative around what you're seeing, about the patterns you're seeing.
Well, I mean, like when Cantor told me that, it was because I told him on Friday afternoon the drug stocks were moving, because I saw like what I think back then was Pfizer and Lilly both ticking up like at 2:30 on a Friday afternoon when the markets closed in Chicago at 3 o'clock. And I'm like, they keep ticking up. And we came in on Monday morning, I don't know, there was some merger, all the drug stocks were up like $3. So, but I just saw they were all ticking up together and the market wasn't doing anything. Well, I don't know. Would everyone see that? It seemed pretty obvious to me. I just watched the prices going up. But so maybe some people... Well, here's another thing. There's research that shows uneducated, like college students, if they show them market data, some of them are definitely better at predicting short-term price. So there is a human... you watch a chart and you watch price action. Some people have the kind of, they recognize that the way those numbers are ticking are reflective of something.
Are there any like natural personality traits or sets of personality traits that lend themselves better to people becoming traders?
Well, I think that we tend to focus on quantitative, right?
Yeah.
But again, you go back to patterns. Like, if you're a super quantitative thinker, then from my point of view, options tend to make more sense to you.
Yeah.
But I think the great traders, and even probably the better traders in my client base, they talk about positioning. In the hedge fund world, the word is positioning. How are people positioned? What's the positioning? How's the positioning changing? That's like, where's everybody long or short?
Yep.
So they think their first thought is, what are the other global macro guys over at Citadel doing?
You're talking more about.
Well, that makes sense too, right? Because these bigger players, they have bigger positions. They need a liquid market to trade against or trade into, right? They have big positions they need to move, so they need to anticipate the crowd and what they're going to do.
Yeah, but if you think about it, what does a chart tell you? A chart tells you basically where people have been in and out, like prices that people accept or reject, right? Like a chart is really a depiction of people's perception. And if you start to understand it that way, I think it's easier. And so the brain research would say that the better you are at that theory of mind, that thing that people are good at in poker, the more likely you can be a good trader, which is what my friend saw in me, I think.
Yeah.
How many traders do you see in your line of work using charts? It's the majority.
Yeah, the majority. However, in certain groups, they're not allowed to use charts.
I
Ooh.
know, I've heard of this. Say more.
So I have, I have a bunch of clients in one firm, and they're not allowed to use charts. Like the leadership will say charts are voodoo.
They have a compliance department that kind of like
no,
in their screen and make sure they're not like on any charting platform.
They don't go that far. But it's like I got this one client who's a young analyst, really, really, really good, and is willing to try to figure out anything to predict what their stocks are going to do. And so I've taught this analyst a few things about charts, just some basics. I also knew that there was a person at this particular firm who retired at like 35 as a complete legend. Like no one can understand how that person made so much money. So my young client, I said, I know that person is still like comes to, events and stuff. See if you can get a meeting with them. And what do you think that person said? Don't tell anybody, but I only use technical analysis. This person is a legend in a firm that eschews, whatever that word is, technical analysis.
So why do you think, how do they get to this place where they think it's voodoo or they think it's bad and they ban it across the firm? Like, why do you think that happens? Because they
go to, they major in finance.
Right.
Maybe they get an MBA with they take the CFA finance, understand like whatever earnings per share, etc. And the 90,000 other things they put in the models. And that's supposed to be like, I have one client who's very fundamental. The last thing he does is look at a chart. Now he's in his 50s. And basically I've worked with him for 5 years and the two of us look at charts together. But I also work with analysts who work for him. And I often say, now remember, the stock price does not drop out of the bottom of that spreadsheet. They told you in finance school it dropped out of the bottom of the spreadsheet. If you're in the CFA, you think, but it doesn't. It's a clue to the stock price because you have other people trading that spreadsheet, if you will. But it's just a clue. So most of them do use a chart at the end of the day, but they don't depend on it.
Right. It's interesting.
Shout out charts. Denise, before we popped you on the screen here, Steve and I were talking about the current state of the markets, and we don't talk about the current state of markets usually on this podcast, but we'd be remiss if we didn't talk about how post-election markets, or whether it's stocks or certain commodities or certainly cryptocurrencies, we've had a big bullish move in a lot of names. household names, micro cap names, everything, right? Everything's ripping. And right now, the people I talk to a lot of retail traders, just as a function of what I do, as well as I run a meetup group here in Colorado, and I have a lot of newbie traders. And there's two common threads I'm getting from a lot of people right now. We got the one side of the fence are people who are just they're making a whole bunch of money, whether they're lucky or not, doesn't matter, but they have some positions that have worked really, really well. And now they're wondering, oh no, like they're freaking out. Like, do I need to sell here because I'm about to lose everything? Or do I need to add to my positions? Like there's a lot of anxiety about what to do with big positions. And then on the other camp, you got the people who did not participate in this rally at all or are underinvested, and they feel like they need to play catch up, and they're experiencing FOMO. So I'm curious. I mean, let's take one at a time. Let's talk about the people that are riding a good wave right now, because there's a lot of them out there. A lot of people, a lot of analysts on my team are doing really well right now. When we get to these points where maybe we're getting a little overconfident, maybe we're just kind of just throwing shit at the board and think everything's working, everything's great, let's just keep going. What are some clues or some signals that maybe we should be on the lookout for to help us make that decision that now's the time to, be on high alert for a pullback in the markets or our own P&L or whatever?
That feeling of, oh my God, this can't go down, is definitely a time to scale out of a little. I mean, that's the lesson I learned sitting next to Balyasny at Schoenfeld, was at the end of the day, there's never a perfect answer. So learning to scale in and scale out solves the fact that if you ever catch the top or the bottom, you're lucky. It's not, it's just, so, I mean, there's just the reality. If you've made a bunch of money, take a quarter or a third off, just because maybe it'll go that same, but whatever, in the totality of market. So that's a good strategy. Now, what happens though, is actually the people who've made all this money have a fear of missing out. If you recognize that one of the riskiest emotional situations is making money, even more so than losing money oftentimes, because basically no matter what you do, it's the wrong thing. You either get out too early, or you wait and get out too late. Those are the two primary things, right? So then you're mad at yourself because they didn't went all this way, or you're mad at yourself that you didn't get out at the maximum excursion, so to speak. And what happens then, you get, it pulls back. You don't want to get out there because you should have got out higher. And then you don't get out there and it pulls back more, and that's how people end up giving back. But if you, number one, okay, scaling's a good thing. Number two, recognize that when you're making money, it's always going to feel bad. So get used to your own feeling bad, but know what it's about, because it's actually rarely about missing out. It's about the prediction you make of what will happen to you when you miss out. What that's called in psychology is fear of future regret. I'm going to be mad at myself that I didn't make more. I'm going to be mad at myself that I got out on the pullback and it kept on going. By the way, both of those are mad at myself. And almost always people are going to say, and I'm going to feel stupid, or I'm going to look stupid. So we experience it as missing out. Oh my God, I don't want to miss out on, I don't want to give it back. I don't want to miss out on the continued rally. But if we analyze our own fear of missing out, there's this fear of regret. And the regret is actually the more powerful emotion. So I don't know if I said before, but in this whole emotions is data, make a dictionary on yourself, what your own patterns of feeling are. So people will figure out that they always get out too early because they're too afraid of giving some back. And then they feel like an idiot. If you get to those next level emotions and are honest with yourself about what they are and feel them, oh my gosh, I'm afraid that I'm going to give the money back, let's just say. I don't want to get out now, even though I think I should probably get out of some, but I don't want to because I'm afraid I'm going to, that might have not been logical. And you look at, what does that really mean to you? You've got to be introspective. You'll see
Steve,
that it's these other things.
Steve, I just had this crazy thought while Denise was talking.
Yeah.
The trader who is upset at themselves because they sold too early. Let's say they sold at 100 and the stock went up to 150, right?
Yeah.
They're pissed off because they left money on the table. Now, the trader who rode that same trade to 150 and sold at 100, he's pissed because he didn't sell at the top. Well, guess what? It's the same result for both traders. They're both pissed off. We can't win. So I think Denise is onto something here with that whole scaling. That minimizes that future regret as best we can.
I scale because it's so much better mentally. And I
Yeah.
learned that years ago, like it's just I don't think about it anymore, right? If I buy something 5 times instead of one time, it takes the pressure off that one buy, right? So it seems to work for me. I wonder though, when you talk about regret, is it what are they regretting? Are they worried more about being right or wrong? Or are they worried more about making or losing money? Like when you talk to traders, is there a difference between those two things? And is there a difference when it comes to like success or experience? Like I know you've worked at some of these big shops, and some of these guys there, they don't need to work anymore. They have all the money in the world, and it's just not about money anymore. It's about
Yeah,
being
it's about the
strong.
game.
Right? So like, is there something there?
Well, it almost always is about the self.
Okay.
Like, so here's another back to the intuition impulse, because that's the other side of intuition, right? Like, you need to figure out if the feeling you're having is about the market or is it about you.
Right.
So, usually, what you fear of missing out, which, if you really look at it, has some sort of future regret. And that future regret is usually not about the money. It's usually about, I'll feel stupid, I'll look stupid,
It's wrong.
I'll be mad at myself because I screwed it up. Like, and any feeling that has to do with you and what's going to happen to you is not intuition. Like, there's another way to, it's, I mean, you could probably come up with some scenarios that, like some feeling about you had some connection to intuition, like maybe skiing a double black diamond over there. But generally in trading, if the feeling's about you, it has nothing to do with the market and it's not intuition. And so what you want to do is be able to recognize it, feel it, analyze it, and not act on it, control the action while you feel worried about looking stupid or being mad at yourself. There are all kinds of flavors of those feelings, right? But we all sort of recognize them. I mean, I will say this. I have professionals in big hedge funds that experience this stuff all the time.
Yeah.
So it's part of the human condition because, and this is important, the human brain's job is to keep us safe. So, like, your subconscious, unconscious is just trying to keep you safe. So everything is really about you, like, based on everything you've learned. So to fight those feelings that are about you is hard because your brain's trying to say, this is dangerous for you. But you can get better where you can accept your brain trying to keep you safe versus the problem outside of you, the market's outside of you.
Would you say to that point, would you say that there is a benefit, or have you identified maybe a routine that traders can get into to help them build a stronger emotional resilience? I mean,
well, it's like anything, it's experience, right? So, anything that we learn, when we first learn it, we're unsure and we have to do it sort of step by step. But, take a sport, the more you do it, you have that feeling you can do it. People don't tend to go through that process with trading. Like, they don't recognize that, it takes however many years it takes to be a good skier or a good golfer or a good pianist or whatever. And we accept that. Like, you're going to stumble, but you're learning how to navigate. And in the process of learning how to navigate, you're gaining that feeling of confidence that you can navigate. So that's first, like, do that for yourself. But I'm always going to say, get the human brain right. Get risk perception right, which is you're going to make a prediction. You're always predicting. And part of the prediction is going to be about your own safety. And then start to learn to say, to recognize all of that as a data set. It's ephemeral and hard to, but you can do it. People do it all the time.
Denise, you said something interesting there about how everyone accepts that learning to ski is going to be hard, learning to become a doctor is going to take time. All those things take time. The funny thing about trading and what we do is that anyone can get lucky once, right? Anyone can put a trade on and make money. The difference is that when people do that, and someone who has no business being in the markets or maybe no business being in a certain trade that they got into and they made money, a lot of us internalize that as, oh, look at me, I'm smart, I know what I'm doing here. Whereas nobody accidentally thinks they're smart at being a doctor if they've never been a doctor before, right?
Right.
That's an interesting, unique thing about trading, I think.
I mean, yeah, it's the low and ever lower barrier to entry, right? Like basically all the brokerage firms made it easier and easier and easier to trade because they do make money off of it one way or another. It's the hardest mental game on the planet from literally what the brain has to do vis-a-vis the problem. Like sports analogies don't apply, by the way. This relates to why it's so, like in sports, like, if the ball went forward, it's good. If it went backward, it's usually bad, generally speaking, like it's football season, right?
Sure.
The game ends at a certain time. So you get like the chance it's over. The score is what the score is. The score is never what the score is in trading, because even if you're not in the market's still happening and you're like aware that, also like an athlete's job is to make something happen, to take their skill and to make something happen. Like that, what happens when you try to make something happen in the market? I mean, you're just giving money away, right?
Right.
Like at best, it's like surfing where you have to like see what the waves are and keep the board up. But so the whole like make it happen, mental toughness, all that stuff is way overrated as it comes to the problem of prices that are constantly changing and the meaning of them is constantly changing. And you have to impute that for yourself in a way that makes sense. Sorry if you can hear my dogs.
So is there
you can probably hear my kid. It's okay.
Is there like a single common characteristic or like best trader trait that has stood out to you over the years? Or no, everybody's different and different strategies require different stuff?
I think it is that greater awareness that you're always trading other people. That there's a bunch of other people doing something like you're doing. Now that then relates to like what time frame do you expect things to happen in? But I guess at the end of the day, it's knowing yourself. And when I noticed this way back before I was consulting. Like I noticed this when I was still full-time trading in Chicago, that it seemed like a lot of the successful people, yeah, they loved the money. The money was fun but it was really more about self-development. It was really more like, can I figure out this game and be consistent at it? And that's am I really using all my skills and abilities? Yes, the money hopefully piles up, but that wasn't, I noticed that way, way, way back when, that wasn't really the motivator.
And did you meet a lot of different personalities early on who were kind of all trying to figure it out, early on in their careers? And did it work for some and not others? And were there certain reasons kind of like, did you kind of like watch everybody kind of grow and develop as traders?
I mean, I have worked with a lot of retail traders over the years, particularly at the beginning. What I thought you were going to ask me is somewhat slightly different. So I'm going to ask what I thought you were going to. When I started in that first firm and with those 18 guys, they all had different styles. Almost all of them had come from the floor. Mm-hmm. But, some guys were momentum guys. Some guys were scalpers. One guy was a risk arb guy, which I couldn't even figure out what it was at the time. Even though he would explain it to me, I'd be like, what? So that goes back to that whole figure out, like, there's a million ways to do this. Like, figure out a way that makes sense to you. By the way, to what you all are doing, something I've noticed in the professional world is people start, they get hired at Goldman Sachs. They're put into a trader training program. They get mentors from Goldman Sachs. They don't doubt what they're being told by Goldman Sachs, right? Where if you're a retail trader and you can hire this firm and, for 3 months, and then you don't like, you need to make money there. So then you go over to this firm with this other method, and then you go over to this other firm, and you never have any sort of sense of how does this really work for you. That may be the single biggest advantage professional traders have. When they start at a bank or in some training program from a hedge fund, they don't second guess what they're being taught. When you're a retail person, if you don't start making money, you second guess the group that you decide to work with and go to some other group. And then you do that and then you do it again. So it's like the people who are ex-Goldman Sachs and hedge funds, the biggest difference is that they went to a place where they believed what their teachers were telling them.
Interesting.
And it's easy to believe that too, right? You step into this big office. It's clearly there's a lot of money around. People are getting paid well. Clearly what they're doing must be working. I should listen to this guy. That's the proof, right?
Mm-hmm.
Whereas, Joe, who opens up his Robinhood account on a Thursday afternoon because he's bored and he's trying to learn how to trade, he's got nobody to lean against. And he's probably just going to, become a sucker to some huckster on the internet trying to tell you how to make money trading 0 DTE options or something like that, right?
Yeah. I mean, and you don't even know. There's so many different ways to do it. Like, how do you even know what makes sense to you? I mean, I did rapidly come to the conclusion that momentum made sense to me and scalping didn't, which Schoenfeld was doing momentum, which is why I moved there. But yeah.
All right. I know that Steve wanted to ask you about billions, and I think it would be irresponsible of us if we didn't at least touch upon it just a little bit. I know it sometimes can be a sore subject for you, but let's get into it. Steve, what do you got?
So we all watched the show. I have to ask, from what I understand, is it Wendy Rhodes, right?
It is Wendy Rhodes, yeah.
So what happened there? Tell us the story.
Oh, gosh. I think the way I've come to tell this story is the bookends. So, but then it's even hard to know where to start. When I was introduced to the show, it was because Andrew Ross Sorkin of Squawk Box.
They were interviewing everybody back then, right? When they started.
Well, they were interviewing a lot of people.
Yeah.
Yeah, but I didn't know. So I get this email. He had interviewed me on Squawk Box. And by the way, you can go back and find that from 2012. I said, fear of missing out and future regret are the number one things that people have to do. If they deal with that fear of missing out and future regret, like we just talked about, that will make the biggest difference. But anyway, I did not know he was writing the pilot at the time when he interviewed me in 2012. As it turns out, Wendy is from Ohio, and her first words as a coach are you eating, sleeping, and exercising? And my first words as a coach, because I play myself in my book, is are you eating, sleeping, and exercising? So maybe he didn't use me, but the statistical odds of those two things are like 0.0006 chance that, he didn't have my book open.
Right.
But I didn't know about it. He invited me. He told me he was involved with it, and the actor wanted to meet me. And so I'm thinking I'll have a glass of wine with this woman or go to lunch with her. And before I knew it, I'm in the writer's room with all the writers and she's not there. And then this gets a very, very, very long story, but I told Brian Koppelman, who's really the showrunner, the creator. I didn't know at the time that he and Sorkin were actually splitting up over money, but I said, Maggie is her real name. Maggie's making a big deal about my book and how they have to read my book. Well, they knew they were already reading it and they were already using it, but I didn't know that. She didn't know that. And I say, it's written as a fictional story. Because I'm embarrassed about my little fictional story in Market Mind Games, particularly in front of the guy who I thought wrote Rounders. Turns out he probably didn't write Rounders either, but he was sued for Rounders too. But so I'm like, it's written as a fictional story. And this guy loses his shit, to be frank. He hit the ceiling. He starts screaming at me. Well, it was because he knew it was at risk of copyright. Anyway, they continued to use me, things from the book, things I said in podcast, in scenes. All kinds of people told me it was true. Writers from the show told me it was true. Producers told me I was not allowed to be on CNBC anymore because they'd been told she can't be on, because they didn't want anyone to know I existed.
Wow. So they didn't even interview, because I remember one of the funds I was at, God, it must have been 10 years ago. They were interviewing guys at the hedge fund and stuff. So they didn't even interview you. They
No, they did.
followed
No, they
you,
did.
write the book. Oh, they did also for the show.
So it was a bait and switch situation. Sorkin asked me to have a glass of wine with her.
Uh-huh.
And before I even knew what happened, that turned into a meeting in the writer's room that she wasn't even there.
Oh.
Right.
And so then I was telling them all this stuff. And then she finally gets there. And then I think to myself, I should probably, unless we're going to make a deal. And so I start to extract myself from the situation. She starts to talk about my book. David Levian is asking me if I will continue to consult. And I say the book is fiction, and Brian Koppelman loses his mind, which I didn't understand. Then 1,000 things happened. I mean, but the core, it's pretty clear from the evidence that he made a deal with Sorkin that I could never be on CNBC again, which also meant I could never be in the New York Times again. And then all kinds of other crap happened. I finally decided to sue them for copyright. It turns out it's really hard to win copyright. But at the end of the day, that experience was just like the show, in that one of their lawyers is an adjunct professor at Cardozo Law School. And one of her students was working for the judge and wrote the decision in my case.
Wow.
Just exactly like the show.
Poetic. So what do you think of the show? With all of this in mind, with all of this as context, how did they portray you?
Oh, it's over. There are scenes, very short sections of dialogue that are pretty darn good. Now, I could show you some of them in my book. Like there's a scene with Taylor about intuition. And, you can read the 2 paragraphs in my book and you can listen to the dialogue, and it's a very abbreviated form of those 3 paragraphs in my book. But for the most part, I used to call it like the Rocky Horror Picture Show for hedge funds.
I know.
Now, Rocky Horror Picture Show is like, dating me, but like it's camp. You might notice they never got nominated for even a single Emmy. Not even one.
Yeah.
So
top too, right?
A little what?
A little over the top, probably not.
Yeah, over the top.
Yeah.
I recently read the book Black Edge about Steve Cohen, and now it's clear to me from reading that book, they had that book, or they had a lot of that book, because some of the beginning is very similar to the stories she tells in that book. Which, by the way, I have doubts about that book too.
That book's bullshit too.
It's got a lot of mistakes in it, like things that I can verify as mistakes. Just like she talks about them talking about conviction, and conviction was like a signal for how much inside information I had. That's complete nonsense. All hedge funds talk about conviction all the time.
Yeah, I know.
Anyway, so that was annoying. But I watched it. It was entertaining from the point of view that it was about the hedge fund business. And, my husband and I would try to figure out who told them what, or like, there was a couple times where I had to turn it off because I was like so mad because it was so clear that was a line like out of my book. And I was like, okay, I can't take this anymore. But finish this episode tomorrow. So it's like, watch it when you're tired, like kind of stupid entertainment. But Succession was much better, Succession was their HBO's answer to Brilliant.
I was late to the Succession game, but I finally watched it and I loved it. Wow, great series.
And they, on the other hand, got nominated for Emmys.
Yeah. Aren't I the one who convinced you to watch that, Sean?
I think you are, Steve. Yeah, I think you did convince me.
Yeah, and the thing with the hedge fund movies or all the trader movies or any of the finance movies in general, Wall Street stuff, it's entertainment. Like, don't take it serious. None of these movies are real. Even the books that say they're real are not real. So, I don't know.
One of the first things I told Brian and David before I realized what was about to happen to me was I was so glad they were going to try to accurately portray a trading desk.
Yeah, that'd be great.
Yeah.
Well, the truth is if they were to accurately portray it, it might actually be pretty damn boring because, right? Most traders that are doing it well are doing it pretty boring.
Yeah.
Not like hanging out in sex dungeons or whatever her and Paul Giamatti were doing.
Well, yeah, they got that character trait for Wendy off of you, right, Denise? That whole sex dungeon thing.
My husband wishes.
It was the husband, right? Yeah.
Well, Denise, we really appreciate you taking the time and talking with us. This has been really enlightening. And look, we can all use a little coaching. We could all use a little,
So
broader pictures of what really drives our decision making, right? Whether it's our emotions, whether it's our intuition, and how we can make better decisions using that. And you are a leading light in that area, and we appreciate all that you do. So thank you for taking the time to do this. Really,
Thanks for having me. It was good.
Thanks, Denise.
Appreciate it.
All right, so that was great. Denise is somebody we've wanted to have on for a while. How lucky are we that we get to pick the brains of people like Denise, who have worked with some of the best in the industry, and they've seen some stuff, and they've seen what works and what doesn't work.
Yeah, and I think Denise is special in a way where she was a trader first, right? She was really doing it, working amongst these people, and then she kind of realized, I could probably help on the other side of things, because it's the unexplored side. And I think things are a lot better today than they were maybe 20, 30, 40 years ago. But nobody talks about the coaching aspect, right? And the mind, and controlling your emotions, or like she would say, harnessing them or using them for you. So more.
Yeah, one thing I did not ask her, because I couldn't figure out the right way to ask her without sounding like an asshole. But when it comes to coaching, trader coaching, obviously, if you work for a big hedge fund or a big bank, there are resources available to you. You can get coaching. You can get expert coaching, the best coaching available, right? No problem. But retail traders, guys like you and me, and people that we know who are independent at work, they manage their own money. How do they get coaching? And how, what is the right price to pay for something like that? So, I mean, some people will say there is no upper price. You should pay whatever it's worth. But I mean, I don't know. I could say for me, honestly, like I've explored trader coaching in the past, and I've always been put off by like, do I really want to spend the money? Is it worth it? Am I going to get what I'm paying for? I wanted to ask her about that, but I couldn't figure out a good way to bring that up. All right, so look, that was great. We need to have more people like Denise on the show, I think, because I mean, look, I like talking to people like Denise because I feel like I learn a lot. And if I'm learning a lot and you're learning a lot, then certainly the people who are watching and listening to us do these episodes are benefiting from that as well. So, hey, we did something good here, Steve.
It's a fun conversation. And Denise is like Hollywood. The billion stuff was fun too. So.
I would really like to get out to Utah where she lives. We need to talk JC into having one of our events out there in Park City. That would be great.
Looks pretty.
Yeah. All right, man. Great job. Good episode. We'll see you next time, everybody.